The S&P 500 made a new all-time high last week, and it's been up for 4 consecutive weeks. And the Dow Jones Industrial crosses the 40,000 mark for the first time, and it closed above the 40,000. And gold is back to near its all-time high. And the fear index, the VIX, is showing the market participants are showing no fear. And the meme stocks such as GameStop went up over 300% in 2 days, and it gave back over 90% in 3 days. So is this crazy price action telling us the market has topped, or this is just the beginning of another run to the upside? Today I will discuss with you what I'm hearing from the market, and what I'm hearing might surprise you. Stay tuned. On this sentiment chart here, we see that the VIX is sitting below 12 and closed on Friday at 11.99. And also the put-call ratio is below the 0.75 and it closed at 0.69. So definitely the market participants are feeling fearless and also they are risk on. And here's the sentiment gauge showing that the market participants are in a greedy mode. And looking at the internal with the up-down volume ratio for the New York Stock Exchange, we noticed that throughout the week there were buying pressure, except on Thursday. We got a little bit of a pullback on Thursday after hitting a intraday all-time high. And also on the daily advance decline, Tuesday and Wednesday, we got the broad market participation. And then on Thursday and Friday, we got a little bit of a pullback, but notice that the daily advance decline was pretty neutral. So that's a positive sign here for this consolidation on the Thursday and Friday. And for the New York Stock Exchange new high, new low, we are seeing that the number of new high is starting to come up, while the number of stock making new low is pretty much flat and constant. So it's a good sign that the number of stock making new high is starting to expand a little bit. And also on Wednesday, when the S&P 500 closed with a new all-time closing high, the cumulative AD line from the New York Stock Exchange also put in a new high up here. So that's a confirmation of this new all-time high for the S&P 500. And for the NASDAQ, we also saw some strong buying throughout the week here. On except on Friday, we saw a little bit of a selling, but not much. And on the daily advance decline, we also saw bond market participation on Tuesday and Wednesday. And on Thursday and Friday was a low pullback. The daily advance decline is pretty much neutral. It's only the declining issue outnumbered the advancing issue only by a couple hundred. And for the NASDAQ new high, new low, similarly to the New York Stock Exchange, we're seeing a little bit of an expansion on the number of stock making new 52-week high. And the number of stock making new 52-week low is pretty much constant and kind of flat. And for the cumulative AD line, although we still have this long-term divergence, the negative divergence between the cumulative AD line and the NASDAQ 100, but notice that the NASDAQ 100 on Wednesday made a new closing high, and also the cumulative AD line also came up and put in a higher high. So that's a confirmation of this new high, new closing high for the NASDAQ 100. So all in all, although the market is showing greedy, but right now the internals are showing that there are still some strength behind this latest rally. So until we start seeing some deterioration on the internals, we'll maintain to keep a watch for higher prices to come. Let's take a look at the ES, the E-mini S&P 500 future, and see what it is telling us. As you can see on Friday, it booked this one-time framing up price action and put in a one-time framing down. Now, also the other thing is, notice that we have a new high here on Thursday. And this new high, we see that it is a poor high. So eventually, this poor high will need to get resolved. In other words, the ES will have to come up and take out this poor high by moving, putting prices higher than this particular high. So when that occurs, we'll likely see the cash index, the S&P 500, will also move into a new high. So that's a clue that tells us that we should expect another new high for the S&P 500. Look at this daily chart of the ES, the daily candlestick chart. we see that it is still within working on this two distribution here. We have this upper distribution and this lower distribution. It tried to break out of this upper distribution on Wednesday and Thursday last week, and on Friday kind of pull back a little bit and close right near the upper edge. So for the coming week, we'll be watching to see would it be able to continue to push up and come up to this upper edge, this upper range of the weekly expected move, which is priced in between 53.81 and a quarter to 53.90. So that's the range for the upper range of this weekly expected move. Now, if it doesn't come up and put in a new high and pull back before it does, then we'll be looking for a pullback down to this lower range, and that is between 52.55 and 52.74.25, and that would also fill this gap here. Now, if it comes back down, and that's pretty much near the mid of this distribution area, then I expect it to look for a bounce to come back up and put in a new all-time high and possibly come up to this extension here. And I have this 50% extension, 80% extension, and 100% extension of this range here, this upper distribution. And looking at the SPY, the daily candlestick chart for the SPY, as you can see, we did see a little bit of a pullback on Thursday and slightly on Friday, even though on Friday we did close positive. But you see that it is putting in a little bit of a hangman type of candle on Friday. Now, if we see a pullback in the coming week, look for a pullback to this lower range of the expected move and basically coming down to fill this gap. And the lower range is being priced in between 522.70 and 524. Now, if we see a pullback down here, then again, we're basically looking for a bounce back up and put in a new all-time high and possibly come up to the upper range, which is priced in between 534.90 and 536.20. And also notice I have a 80% extension and also a 100% extension of this balance area here. And those are possible target, and they are up at 534.47 for approximately 80%, and 100% is 537.14. Now, in this chart with the major market indexes, what the market is telling us is, you look at here on the Dow Jones Industrial, it closed with an all-time closing high on Friday, and so did the New York Stock Exchange Composite. So these two closed with a new all-time high. Now, one thing when the market is top, you typically only see one index makes a new high. In addition to that, you do not see a broad market participation when the market makes a new high. Basically, what you're seeing is a narrowing of the number of stock or the stock that are making high that push the index into new high. So the New York Stock Exchange is the broadest market index among all these major market indexes, because this index contains approximately that 3,000 stock traded in the New York Stock Exchange. So it cannot be influenced by a few selective mega cap stocks such as the Apple or the Tesla, the Google, Microsoft, and they could influence easily. We saw that on the Nasdaq 100 and the SP500, but that's not the case for the New York Stock Exchange Composite. So this is another way the market is telling us that we should expect another new high for the S&P, or at least for the market in the near future. So with positive market internals and this poor high from the E-mini S&P 500, and with a confirming closing high between the New York Stock Exchange Composite and the Dow Jones Industrial, the market is telling us to expect a new all-time high in the near term. I hope you find this video to be useful and informative, and be sure to smash that thumbs up to help promote this video. If you're new to this channel, click to subscribe to help support this channel. And if you want to see more of these content from me, go check out my newsletter at smtraderca.substack.com. Thank you for watching, and good luck on your trading.